All right, traders, let's walk through exactly how you can trade a fair value gap correctly. So what's happening here is you can see price action has come into this fair value gap. Notice how we're above the 10 a.m. Eastern, right? So what we need to understand is you need to understand basically what is going on inside of this region, right? So you need to see this final rejection here, and you need to see what's going on over here, and also you need to see what's going on over here, right? So three places. Let's start with place number one. You can see a large amount of buying over here without even reading the numbers. But if we just kind of zoom into the numbers a little bit more, the numbers basically reveal, it says 529 for 1,000. So if we go back to the candlestick charts, this means that there's twice as many buyers as sellers. But what's important to understand is we saw the market breaking structure over here. So these buyers were not rewarded. So buyers failed in this region. Now when price comes into this kind of fair value gap over here, what's happening over here, if we look at the order flow in a little bit more detail, the order flow basically shows us that we saw a lot of buyers over here. Notice how we had blue delta over here, and we also had a large, massive buyer step in. In fact, when we read the candles carefully and closely, what we saw is we saw 333 for 688. So we saw so many buyers, but the fair value gap still held. And so because of that, the market is actually bearish, right? This is the real reason the market is bearish. So this fair value gap is strong, and we can therefore target at least a 1 to 2 risk to reward, right? So for those who are struggling with fair value gaps, you just need to understand how the market actually works, right? So once we have that in place, let's kind of play price on a little bit. We can see the market heads to the downside, right? So trading fair value gaps with the delta is super important.